discuss everything about markets, how the day has panned out, where were the gains and losses seen, and now what should be the strategy that investors must follow. To discuss all the insights on markets, I have with me a special guest joining in. Kranti Batini joins in. He is the equity strategist at WealthMills Securities. Mr. Batini, thank you so much for taking out the time and appreciate you joining in as always. Let me just quickly wrap up for all our viewers how the day has panned out. Well, it was the fifth consecutive session when we've actually seen the markets really falling in today's trading session, and things changed towards the fag end of the session today. It was not just the domestic markets, but also the global markets that were hit hard today. The Sensex, in fact, plunged about 1,183 points from the day's high level. It settled 700 points lower at 56,463, although it had touched an intraday low level of 56,009 as well. When you talk about the Nifty, it has given up the psychological level of 17,000. It has ended at 16,959. Down 215 odd points, and both these indices slipped about 1.2% each. Of course, there was far and few between gainers like the Reliance Industries stock or ICICI Bank stock that were bucking up the trend, but the major part of the 30-share Sensex or the maximum stocks, be it the HDFC twins that dragged the street and the sentiments, ITC, Tech Mahindra, Infosys, Nestle, HCL Technologies, all of them have dragged the street, and the broader markets have followed suit as well. Mr. Batini, I want to begin by asking you, how are you looking at the sharp fall yet again? Today's whole day was looking like a positive day in trade, but things turned towards the end. What does this really indicate about the texture of the market? Is it still weak, and are we looking at further weakness in the markets?
Sakshi, today at the end of the session, what we witnessed is a heightened activity and a high volatility in the market. Towards the last 45 minutes of the trade, there was some geopolitical issues, the geopolitical news that surfaced in the market, that created some kind of panic selling by retail, as well as what we are witnessing is from past few days, there was no subsequent follow-on buying by foreign portfolio investors. Probably today, the second half of the session, we need to see the provisional numbers for today. What we can foresee is there is a heightened activity from foreign portfolio investors exiting from the emerging markets due to these geopolitical issues, and also the rise in inflation across the globe. You see the markets like European markets, US markets, where all the markets they have a scare right now. The inflation is the major cause of worry, and also rising bond yields in US also creating some pressure on the stock indices in emerging markets. Right. This is the primary reason for this panic right now. We need to wait and watch, and the long-term investors in India, they need to treat these kind of panic jerks in the market as opportunities. Definitely, India's story is on despite of what's happening in the geopolitical territories. So long-term investors, there is no need of worry, and the blue chips are giving a very good entry points. Last few months, if we have to think about the blue chips, they are at a rooftop valuations. Yes. Right now, there is a kind of softening of valuations. So the new investors and the long-term investors, the investors who are entering right now, they might be have a desire to accumulate these stocks in their portfolio. Now this is the time they can go all out, and in a staggered manner, definitely they can accumulate these blue chips in their portfolio. Every time when earlier, because of the high valuations of these large cap stocks, there is a heightened activity in mid and small cap stocks. When right now, when we have a quality stocks available at attractive valuations due to these kind of geopolitical panic issues, and as you said rightly, today is the fifth consecutive day fall of the markets. So investors with a long-term approach, they can definitely look into the large cap to accumulate in their portfolio, which will give stability over a period of time to the individual portfolios.
Absolutely. You hit the nail on the head when you talked about the blue chip stocks, because these are the stocks that have been dragging the sentiments in the last few trading sessions. Talk about the HDFC twins. We have seen a consistent fall right after the merger news came in. There was one day's enthusiasm and it all fizzled out right after that. And today also we've seen sharp fall on HDFC Limited and HDFC Bank stocks. From the IT pack, Infosys has been dragging from the time the earnings have been reported as well. well. FMCG space also showed some kind of a fall. ITC, Nestle also dragging as well. So which are the pockets that still look very, very attractive to you, amid this kind of a volatile environment, and where should one keep their focus amid sectors?
So actually, given the kind of the long-term history of the stocks like HDFC, Twins, Infosys, what we discussed, definitely these are the entry levels for these stocks. One cannot ignore, and nobody knows the bottom of these stocks.
Yes.
But in a staggered manner, definitely, if I have to buy 100 stocks, I can put my money tomorrow morning trade at least 2025. I can invest. Okay, so investors in a staggered manner, definitely they can chip into these kind of counters and use these knee-jerk reactions in the market as an advantage for the retail investor, as an advantage for long-term investors to get into these kind of stocks right now.
Okay, specifically talking about some mid cap and small cap stocks also. So if you talk about the kind of reflection we've been seeing in the broader market space, there has been further pain here as well being seen. So how are you looking at these two pockets of mid cap and small caps, and how should investors really approach these two spaces?
Sakshi, we need to see how the mid and small cap stocks are going to deliver the Q4 results. Okay, that is the crucial thing we need to see, and also how these companies are going to maintain their margins. Because as we discussed about the inflation, this is the key concern for every sector, every stock. So how the company is going to keep the margins intact, and also how the future guidance in the days to come. If this inflation is transitory, then there's no problem. But given the kind of mood of the global market, I don't think so. It is an immediate transitory movement for the inflation. So coupled with that, how the RBI is going to move, and also Fed rate hikes. So the markets are going to have some more kind of speed breakers in the days to come. So one need to position keeping these speed breakers in line, and speed breakers in anticipation in the investment journey. So one need to slow down their little bit their speed, and be cautious at this point of time.
Okay, you need to maintain caution at this point in time. Although for long-term investors, great opportunity to invest in these blue chip stocks that have fallen quite a bit, and the valuations are looking attractive at this point. So definitely you can provide some stability to your portfolio by adding these good fundamentally strong stocks of blue chips to your portfolio at this point in time. Thank you, Mr. Batini. Great speaking with you and seeking insights on the markets as always. Thanks a lot for joining us.
Thank you, Sakshi. Always my pleasure.